let's head down. Hello, cute puppy. Hello, my best boy. Yep, we're going to head down a rocky road and hope for a soft landing. And if that sounds like your investment banking cartel telling you how there might be a minor recession, but there's going to be a soft landing, or 5 of the 23 odds saying there'll be no recession at all. How about that? No recession, even though technically you're already in one. You already met all the criteria for a recession a long time ago. And here, my friends, begins your rocky journey to the world of no recession. Caught between the devil and the deep blue sea. Yep, you were the market sniper, and we're getting our dentures rattled on a very rocky road. Whichever pathway you take, it's rocky. Man, I've done this one a couple of times, and every time I usually get at least one rock, whoop, that kicks up against my shin and gives me a proper old ding. How about that for a descent? Doesn't always show up on the GoPro as to how steep it is. Having to grow a pair, I am, for this wee cycle. So, we got our first little wobble. We got our first little wobble. Look at the sea there. It's not all bad. It's not all bad life. We got our first little wobble in the markets on the soft landing narrative. As you know, we've been kind of on the doom and gloom part of it. Rates are higher than they were pre-COVID's height. Add to that the fact that you have way more debt for the post-COVID debt. Woohoo! And they're telling you soft landing. Soft landing, my hourly. It's like going off the edge of this cliff and expecting a soft landing. Yeah. So stocks were down, but still the mighty dollar falls. That was quite an interesting one. Didn't drop the seat there. Got a little crotch grabber. Whoop, whoop. Smashing the berm, that is the journey to the big wet that awaits you. As I say, caught between the devil and the deep blue sea. So what's the problem? Well, initially the 3 biggest problems at the time were Europe on weather. So the 2022 themes: Europe and energies, America and the world generally, inflation, go. God bless battery power. Got to keep pedaling though. Europe energy. Inflation globally, particularly America as the dollar currency, and the tightening agenda of the Fed. Then, third one, China shut, zero COVID. So the whole soft landing, the soft landers are like the moon landing guys. In my world, there's credibility. We'll ride on a little bit before I take you into the water. Shall we swim together today? I swim buck naked. It makes you a dirty old man once you cross a certain age, I think. Anyway, so we suddenly end up with the greatest boon that ever happened. The 3 major themes of pain of 2022 that I just described all encountered major U-turns. Like this, poof! China went into a full-blown, wait for it, a full-blown back to work. Zero COVID. Wow, that was a shit idea. Let's try something different. Everyone back to work, everyone back to work. How's that for a consistency and some utter schizophrenia? You couldn't have predicted that. So that means supply chains switch back on, workers making things, breaking things, and doing economic activity. And then weather management. Oh, and do they weather manage? Suddenly, we've had the warmest winter. I think we've had 3 days in a row of rain that depressed me thoroughly. But I am telling you, I swam in the ocean with weather like this on the 1st of December, buck naked, standing, lying on the rocks. I've done it. I'm going to do it today. I'm riding. It's balmy. The sun is out. It's the least wet and the least cold Cyprus winter in ages. And isn't it amazing? No real bad winter for Europe, plus lots of emergency dirty deals done dirt cheap. So I shared to the community a WhatsApp video, an Afrikaans guy in South Africa explaining and pointing to, as far as he could count, about 339 with many more to come, all on a freeway of coal trucks, mega double, these huge trucks, and it had 2 open containers for coal carriage. Each truck. Coal export to Europe went up 700% from South Africa. And of course, they don't use the good coal for themselves. They take the money and steal it, because they have a stealer party in charge there, which is all about the pump, the dump, and the brake. Their game is to destroy it. Does nothing for indigenous South Africans' political reputation, but nonetheless it's going to be what it's going to be. And those kind of arrangements have been gap filling the Russian gas narrative. Look at this countryside, beautiful and lush and green because it's had some rain, but actually it's pretty sweet. So all of that has gone on. So they've pulled every dirty trick in the book to patch up Europe's, and let me tell you, that's coal burning. Never mind Greta Green in Euroland, that is freaking coal. You gotta laugh. They're busy sprouting in Davos about this, and you're seeing fancy namby-pamby little man-child Al Gore throwing his little tiny hissy fits about how serious we've got to be, as if he's the main man, front rider here on this eco horseshit agenda that they plan to push, which is also validation and justification for population reduction. If there's one thing that is being tapered, it's the global population. That I can tell you. You can't taper the Ponzi, but they're doing a much better job of tapering the population of the world numbers. In fact, I'll be doing some research on China and why China is not going to own the next revolution. For all those calling the end of the American revolution, the whole notion that it's all going to become China is wrong. China is going to continue to be a significant nation with significant things, but they've had their peak, just like America's had their peak. And why it was such a small one, I'll drop into details. But I think it's within 25 years, they'll be at 975 million population. They'll have lost 0.5, 0.6 of a billion people. Never mind the rapid rate that they're probably dropping in terms of COVIDs as wholly compliant, zero lockdown crew. I love the water. Look at that. It's virtually see-through there. Beautiful. Come and join us for a swim, live your life. Anyway, so those things were in terrible shape in 2022, and we got almost 180 degrees turnarounds on these. 180 degree turnarounds. China opened. They suddenly just decided. Isn't that unique? You'd think there was a force that was coordinating these things and said, okay, we got it too far. We're not yet ready. Back off. Let's get everyone back to work. Let's do this, you know. You'd think there was a coordinating force. Oh, get Europe all the energy it needs. Okay, we've got everything at the brink. All the explosives are in place. We're just not ready yet. And they've backed it off. Ergo, all of a sudden, it's going to be a soft landing, The banks get all the heads up regarding the plans and start sprouting soft landing and just mood managing everything back. Too many people, too bearish, too soon. We need a little bit of surprise factor here. Everything's going to be fine. I love that old warbled fucked up jetty. There's something artistic. Somebody needs to do a painting for that. Anyway, so with that all said, let's do a turnaround here. With that all said, here we are. Soft landing is peak soft landing. But then, yesterday, the producer price inflation numbers come in. Well undershot. CPI well undershot. All the indicators is now we killed the fucking thing. We've killed the economy. So you might be getting reductions in inflation, but now you're in a situation where, well done, you're effectively killing the economy to do it. Which is the whole theme, the rocky road to be caught between the devil and the deep blue sea, which is where we are physically, and it's where Powell and cronies are economically. So those things are going to continue to drop. Hey, I'm taking a route I haven't taken before. I'm not even sure. It's a cycle path. Will we be able to get up here on the bicycle without falling over the cliff edge? Yeah, it seems we can. So what happens next? Well, the problem is once you start a cascading collapse and people knuckling down and ceasing spending, you don't just switch it all back on. You have to start changing the mood music very quickly to get some optimism back. I think I'm gonna have to turn around. To get some optimism back, you're gonna have to change the mood music. Because right now you're playing funeral tunes and everybody's crying. And that ain't good for spending. That ain't good for investment. You've sold them in the recession and they've believed you. Bad idea to come up this way. Let's try down here. So now you want to go back to singing a sweet tune. And I'm afraid it doesn't just get switched back on like that. You need more 180 degrees of good luck and good fortune. But instead, you're feeding people the divorce crowd, shitting on everybody, insisting how the world has to change. I've never seen so much coordinated pushback on WEF before. Now, you used to feel like one of the few lone voices in the wilderness. Now, people have got the hump. They're finally fucking talking. Twitter has set up a light. They suddenly said George Soros would not be there. Bill Gates would not be there. All the major targets that they know, 5,000 people, 5,000 soldiers would be brought in. All of these things. I wonder if they started to read the AI bot that is running your Twitter profile and the anger and the sentiment towards a clear-cut, fucking psychopathic, dangerous cartel for which fair fucking game rules apply. They want to kill us. Get them first. Fair game rules apply on the World Economic Forum, and every little wench, because there seems to be a lot of women as well now, making utterances, and every single man that is pushing and part of and having their little hissy fits like old Al the gory man he is. I'd like to see him and his fucking Learjet get some fucking comeuppance. Anyway, that's sentiment and emotion aside. The soft narrative tale, barely has it launched, is already finding problems. What does this mean for you? Well, you have to think about your Bitcoin and your crypto markets. You've got to be aware. We've not got in all in calling bottom, and we've not got in all in calling not a bottom. We're fence sitting pretty admirably here. But the scope for a major downswinging event is definitely here and feasible, and it remains our base case. And generally, when that happens, everybody runs to the dollar and liquidity, not to Bitcoin. I'm even seeing a chronic downturn potential in palladium, which I've been talking about in my premium community. Gold and silver has been strong. I expect sell-offs, but not to the same degree as I would maybe in palladium, the industrial use, which has been a substitute for platinum, and platinum is oversold in my view. But also, cryptos can be hit again. The perfect medicine for new bulls is another event. Don't forget, Binance can still be taken on by the Department of Justice. The SEC can make some new moves. The fallout of FTX, there could still be plenty of scope for fresh FUD in the crypto sphere. And as a result, I'm warning caution. Possible bottom, possible not bottom. Possibility of a major sell-off. And if that occurs, as I think it still can, although it was being pushed out with the soft bottom calls, it could indeed turn out to be a situation that sees many things dip quite hard. So, do not buy the soft bottom narrative. Be careful out there. Do not buy the soft bottom narrative. Now, I'm going to go jump in the sea. Yeah, so I don't feel the soft landing narrative is going to get away with easy ride, is the long and short of it. Had a nice swim. Didn't do any footage because I haven't got the waterproof box on, I suddenly realized. So, yeah, we're going to have to see. We're going to have to see what happens. Copper made its target to the upside. I think it could have a rest. We mentioned palladium looks very vulnerable. So, the deflationary forces could take hold in spite of China being switched back on, because it'll be a consumer-driven, a retail consumer-driven event now. No longer a supply chain driven shortage. So you get supply shortages that reduce GDP. People are making the stuff that they need to sell. And then you get demand-driven issues. So demand is going to go down. Anyway, so divorce, the jet set crowd talking green. We of course got Greta's fake arrest. which looks every bit as contrived, trying to recultivate. These guys are unoriginal. They're trying to recultivate that Jane Fonda incident. Many of you won't know what I'm referring to, but Jane Fonda was a bit of a actress darling of her era. And you know, sort of peace marcher, LSD hippie, one of those, you know, she got real cred. She was given lots of real cred in the peace and the hippie and the free love movement. You know, she was resisting the cops and got arrested. You know, and it was like a badge of honor. They've now created this as a scandal. They do it with their models like Kate Moss for cocaine or it's things like that, and they'll do it with Delvine, who's the little wench from the same family bloodline. And supposedly resisting the agenda through the police forces that are all cultivated events, are all part of making the impression that you have someone who's truly counterculture. Wrong line. Just missed my line there. My big cycling challenge, you got to nail it every time perfectly. It's quite steep. Anyway, so there's been a lot of the usual fakery and fuckery, but I think Davos got a bit nervous with the attention it was commanding. And I think they got a heads up that there might be some people that really might be potentially planning more active resistance. I hope that's the case, personally. So hence the fear. So, yep, let's go down here. So I think that's sort of the gist of it. Don't buy into the soft landing narrative. All the risks still remain on the downside, are still there. It's just a question of when they let them go. I always get frustrated by these interim periods. It's hard to set an investment course or strategy. You know, everybody wants to be early to call the Bitcoin next bull. Everybody wants to, but macro dominates. Macro dominates. And macro is awful. And we are awaiting the truth and the effect of these interest rate policy rises. Canada properties crashing, States properties crashing, lots of other areas and places where property prices are correcting downwards. So it's been very hectic, and that affects consumer wealth effect. That affects how much disposable income they have. Banks. Rumors about Bank of America problems. Seeing some stuff could be fake or misunderstood, but like TikTokers, that's anecdote, it's not confirmed. Having concerns and streaming out of banks about money that's been taken out of accounts, but most people were there for that reason. We don't know. Little rumblings. The American banking system is not as safe or as strong as they tell you it is. The European banking system has difficulty convincing anybody. Credit Credit Suisse, the one that's in trouble, is actually paying their bonuses up front, not in pieces, to try and retain staff, because lots of people think it's dead man walking. And if they can get a job in a bank that's less likely to go down, they'd rather have it, you know. It's a big wheel, and it's quite a long bike. It's so stable, but that does mean I find it hard to wheelie and hold it up. So banks, yeah, banks are going to be a problem. I think they're trying to lull us into a false sense of security about a soft landing. I think there is that tendency to want to do that. So how do you play it? You stay with the macro course, I think, the correct answer, and this is as much talking to myself as it's talking to anybody else. Because I sometimes go, it's hard, you know, it's hard to sit in your hands when they start a new rally on cryptos, gold hitting highs, all of this. It's hard to just sit in your hands. I had, thankfully, a big holder of gold at investment level, but I'm not trading that much. So what do you do? What's the allocation? How do you play it? And I think you avoid getting sucked into the game. You've got to avoid getting sucked into the game that you're witnessing. You've got to avoid being sucked into the soft landing tail. You've got to stay strong on the concept of things aren't quite what they seem. You've got to make sure that you are recognizing the macro frailty of the situation, and it's better to trade the macro trend and be with the macro trend than to try and make money in short, small rallies that could get suddenly hammered. Hey there. Hello, boys. So, yeah, I think that's all I can say. Don't lose your head on anything risk on at the moment. If you feel you have to participate because you don't have that patience, or you think it could be bottoms and everything could be turnout, do so judiciously. Do so at a small level. And often it's at the most uncertain times you really want to be the most bullish, but the fact of the matter is not with this macro overhang. The macro overhang is dangerous. Yep, with that I'm going to let you go. Thanks for watching.
Guys, hi. In a short but succinct epilogue to the no soft landing video that you've just watched on the bike, it's helpful to have access to notes and screens, obviously, that riding doesn't allow. One of the key aspects that I want to highlight to you that you've got to bear in mind as to why I say there's no soft landing is, number one, this came in after the recording of the cycle on Zero Hedge. So I recorded that video cycle on Monday, Tuesday, Wednesday. Goodness, a day ago. I'm losing track of days here. Thursday, so it must have been Wednesday. This came in on credit. And this is a really important point. Let me just expand this article nice and big so that everybody can see exactly what we're walking and talking about here. This is savings rates and credit cards. And it goes to say that anything where you are spending on credit cards, you're clearly not saving. And there's a couple of things that'll come out of this. Let's freestyle draw here to show you this point very carefully. So the green line is the savings rate. So with the blue cookie, I can highlight savings rate super high when you were all getting stimmy checks, Needlecraft March 2020 and resulting aftermath. Then subsequently spending on credit, as savings of course goes exceedingly low down, absolutely spiraling right up. This is retail consumer. This is retail. That's man in the street. That's you and I, and average Joe. Savings rates, credit card rates. Then what happened is Discover, which I understand is substantial US card lender, is showing available credit card interest rates. So what's actually happening is the average credit card interest rates is spiking. So the debt is spiking simultaneous to the actual charge on interest rates, courtesy of the Federal Reserve doing their rate hikes, of course, and of the excruciating margins that credit card companies charge, has actually now see almost 20%, almost 20%. You're through the 19% mark on the cost of that credit compared to the lows of subprime and then the Needlecraft era in and around the 14.5. So you've got another 25% on the Needlecrafty era of 14.5 up in costs for servicing debt. So A, the amount is skyrocketing to new highs. B, service costs thereon is significantly higher. So you've got a bigger number at a bigger interest rate, which can quickly see double, 2.5 times, 3 times in certain individuals' cases, which is not very pro-growth, is not very much credit space available for new purchases, and a lot of stress and de-stress. A lot of loan provisions being added, the discovery charge-off rates spiking, forecast bad debts basically. So that's the one story that I add with a little bit more factual disclaimer. The other one, both of these from Zero Hedge, by the way, links below, will include house pricing. So let's just also include this. Now the title reads, current housing bubble will make 2008 look like a quaint little adventure in comparison. So the scale of property prices relative to real disposable income and service charging in an environment where, again, those interest rate hikes that the Fed put in are only just starting to bite. Some people will be on discount deals for a while. They'll only come up for renewal then in a certain anniversary period. So all those hikes that have been stacking, don't forget that at 0.75, almost 4 consecutive goes before slowing down. Now, at the same time, the dollar has been absolutely slammed. The dollar has been slammed. Let's pull up the dollar for everybody to have a look at. The dollar has been slammed. So if the Fed were not to do a 0.5, I would expect interest rates hike over here. There will be further scope for the dollar to get even harder hit. It has fallen to 102. Our original call of the 111s for getting out is turning very prescient. This is quite a slam down now. It's harder than many people expected. Your first upside HVF was over here, by the way. So the fact that you should have got out at target is very clearly well made. Learn about HVF method, go to themarketsniper.com, book a call. Anyway, so this is an ugly candle. An attempt to rally right up to here has been smacked right the way back down. It's an ugly candle. And if the prospects start to get baked in for a less than 0.5 hike, then there's going to be problems for the dollar. Who benefits in the dollar's problems? Well, the euro has had some benefit, but you've also seen a tick up in Bitcoin. And one of the primary benefits for me, for its typical beta of performance, has been gold. So central banks, we've seen also other tables of information showing month on month distribution of treasuries by China, Japan, UK. Those are the three biggest after the Federal Reserve itself, of course. And then what I call the Ponzi launder nations of Luxembourg, Switzerland, and Belgium, which are always the surprising bidder for lots of T-bonds every now and then, whenever there is a bid absence for our debt Ponzi scheme. So those are a concern. So we've seen the selling off of treasuries gradually out of most of the top tier, the China, Japan, they've been reducing. And gold has been accumulated simultaneously by the central banking cartel. Now, I'm not going to go to the gold chart. You can come and follow us in the premium area to see the gold chart. What I'm going to show you is the gold silver ratio. And in actual fact, I'll go to the gold chart and I'll put it on directly from there. Divide by SI. There's the chart I was looking for. Now here's, we warned of a rally in the gold silver ratio, which would see more upside movement in gold than silver, or both going down, but silver more so. We warned of this when we were down here, and we even drew a potential right shoulder. You already now have a situation where, in fact, I need to move my top bar because that right shoulder has already made the approximated elevation I would have expected for it to do in terms of gold's primary purpose. Now remember, central banks' storage for silver as a lower value item is massive. It would need warehouses. Gold will give you much more bang for your buck in terms of how big a room you need in terms of holding value. Central banks deal in the big money. So gold moves first. It is the God market, and this is your rally. And it's a rally actually on silver holding its own and gold going up, which is a bullish environment. Drop the Fed increase, and this could go a tiny bit higher, and then they could both turn as silver. This could then turn as silver starts to overperform gold as the cat gets out the bag. Okay, that's your epilogue that I just wanted to add on to our cycle ride. Give us a like and a share. Don't forget to go to themarketsniper.com to book calls for specific trades. We have an FX trade that we jumped back in on, yeah, it's going to be a fairly little cheeky, interesting one on a lower time frame that's already delivered a profit once before. Okay, till next time, we'll catch you then. Thanks for watching.